What usually happens when you see a movement like this? You call it a range, a consolidation, whatever. What usually happens? You define the resistance at a support levels and you wait for the breakthrough one of the levels, right? But you never know when this break is gonna happen, right? And this is exactly what we're gonna fix today. First of all, I don't call it a range or a consolidation anymore. I call it a balance. And the balance structure is the biggest part of my W3 flow system. Okay, just a quick recap of the previous lesson. If you didn't watch it, go and watch it in my educational playlist where I break down every part of this balance. Right now, just a quick recap. Any balance starts with an impulse. We can classify any range or consolidation as a balance until we see an impulse, a clear directional movement preceding it, all right? The first step of the balance is a fix. What is a fix? Fix forms when institutional traders close their positions partially or entirely. The second step of the balance is an inertial trade. An inertial trade is a trade taken in the same direction as the previous movement. Fix and inertial trade are the first part of any balance. Okay, the third step is a responsive activity. We can have two or one responsive activities from one or the both sides. What is a responsive activity? To put it simply, a responsive activity is a response from an institutional trader. Okay, and usually it happens a bit above or a bit below the borders of the balance. And by the way, in the first step, when the fix and inertial trade form, we define the top and the bottom boundaries of the potential balance. Why potentially? Because we can't classify this range or a consolidation even if there is an impulse preceding it as a full balance before we see one of the responsive activities fully formed. All right, these are two crucial factors of classifying any balance. Okay, when we have one or two responsive activities fully formed, the next step is the third segment. The third segment of the balance can take different forms. And here on this image, I clearly showed almost every possible type of the third segment. One of them is initial fill reinforcement. What happens here? Institutional traders, participants of the market, just reinforce an initial fix. Here we can also see a responsive activity reinforcement. In this case, the price would go just a bit above. Okay, another type of the third segment is the middle level, let me show it, middle level reinforcement. All right. The next potential type of the third segment of the balance is push through rotations. We see a tight range, and then final step of the balance is repositioning. A clear impulse in one of the directions, up or down, below or above these boundaries. All right. The next step is an initial fill. When institutional traders initially fill their positions. Then we see a retest, which can also take different forms, and then move continuation. And that's it. That's all you need to know about the balance structure, which is again the biggest part of my W3 flow system. Okay, now the question is how to trade it. Okay, where to take trades here. I know, I feel your pain. And now let me explain how and where to take trades. We don't trade fix because this is the first counter-directional movement and we don't trade it because we are not sure what's going to happen next. But we can take this, an inertial trade, because in 90% of cases this is a guaranteed trade in the same direction as the previous movement. And usually, not always, but usually somewhere here we can see some volume, some range that help us identify the key level where an inertial trade can be taken. Next, responsive activity. Can we trade a responsive activity? Yes, we can. but this is an aggressive trade. This is an aggressive trade, all right? So a responsive activity is also tradable. We can trade both bias responsive activity and bias responsive activities and self responsive activities. Because at the moment when responsive activities form, we can't 100% know the exact direction the auction can take further. All right. So both of these responsive activity, sales responsive activity and bias responsive activity are tradable, but these are aggressive trades. Okay. What happens next? Next, we see the third segment of the balance. Do we trade it? Is it tradable? Yes, it's tradable. And for example, an initial fill reinforcement or responsive activity reinforcement is tradable. But when we see this, it's still an aggressive trade because the price reaches one of the boundaries, and this is an aggressive trade. But usually, when reading the context, when reading the 15-minute auction the previous day and aligning it all together allows us to understand whether we can take this trade or not. Then, middle level reinforcement. Is this tradable? Yes, this is tradable. This is tradable. This is tradable, and this is a conservative trade. Middle level reinforcement is a conservative trade. Then push through rotations. Push through rotations. Are they tradable? Yes, of course. And this is one of my favorite trades. I love to trade, and this is also a conservative trade. I would say it's even more conservative trade. Then we see repositioning, a clear impulse. Then we see an initial fill. Is it tradable? No, it's not tradable. An initial fill is not tradable because we see a pullback, a retracement. Institutional traders partially close their positions here. Then we see a retest, and retest is tradable because the auction clearly showed us the direction it takes, and we take a retest. The most conservative trade from all of this. Once again, from the very beginning, we don't trade fix because this is an initial counter directional movement. We can't know what's going to happen next. But we can trade an inertial trade. An inertial trade can be found through some rotations here in the previous impulse movement, okay? This is somewhere in the middle. I can classify it as an aggressive trade or a conservative trade, somewhere in the middle. But as I said, when there is clarity in the previous moment, then there is an indication that this trade can happen. In many cases, this is tradable. Responsive activities, they are also tradable, and but this is an aggressive trade. This is an aggressive trade because we join institutional trader very, very closely. But when you understand the market structure, when you understand the balance structure, these trades, even they are aggressive, would be doable for you. Doable. Right. Next, the third segment. All types of the third segment are tradable. When we see the balance formation on the higher time frames, like 1 hour time frame, daily time frame, or a weekly time frame, all these can be aligned together, with the 15-minute auction, with the previous day closure, and then all these become tradable. All right. Now let's move. By the way, I highly recommend you to watch the previous video and the first one, where I break down the balance and the whole W3 flow system. Okay, just do it. Examples. Let's start from this one. Weekly auction. Okay, what do we see here? We see an impulse preceding this huge balance. Okay, then we see an initial fill and retest, move continuation, and then fix. This is a part of the previous moment. Then we see a fixed formation, the fixed form, the participants of the market, institutional traders, closed their positions. In this case, partially because the movement continued. Okay, then we see an inertial trade. Can we participate in this inertial trade? Yes, because here we see a rotation, and this was tradable. This was tradable through understanding all the low time frames and aligning everything together. So here initial trade is tradable. Is totally tradable. Then responsive activities. As I said, responsive activities are also tradable. But in this case, this was an aggressive responsive activity. This is a weekly auction, and all this could be done through understanding, as I say many times, for understanding the context and ability to align everything together. These are tradable. Then what we see next, push through rotations. Next we see push through rotations. This is, as I said, one of my favorite trades, and this is doable. This is doable. Then we see repositioning and initial fill. We don't trade an initial fill, but we trade retest. Retest. All right. Let's move to the next example, daily auction. Again, we see a preceding impulse, an initial fill, retest, and then fix. We don't trade fix. Then we see an inertial trade, which is tradable, and this little rotation allowed us to identify this inertial trade. Then we see a responsive activity, sales responsive activity, which was not fully formed due to early bias reactivation. And then we see middle level reinforcement, which is also tradable, which is a part of the third segment of the balance. Then we see push through rotations. So here we see a combination of the third segment, all right? Then we see repositioning. Then we see an initial fill, which is not tradable, and retest. Retest and move continuation. Move continuation. All right. Let's move on to the next example. Next example. Hourly auction. What we see here. We see a preceding impulse, then we see fixed formation. We don't trade fix. Then we see an inertial trade. And in this case, in this particular case, it was difficult to identify an inertial trade because there were no volumes here, no rotations, nothing. It's one of those cases when it was an inertial trade. In this case, was not tradable. It's a rare case, but it happens. And an inertial trade here was shortened. It was not fully formed. Then we see a responsive activity, which is totally tradable and doable. Then we see bias responsive activity, Then we see, which is also tradable. Then we see push through rotations, repositioning, initial fill, and finally retest. Once again, here we were able to trade responsive activities, push through rotations, which is the third segment of the balance, and retest. As you can see, balances can take different forms, and this is absolutely okay. And the last example I wanted to share with you today. Okay, 15-minute auction. What is happening here? A preceding impulse, then we see a fixed formation, then we see an inertial trade, and this level allowed us to participate in this inertial trade. Then we see complex responsive activity, which was tradable. These were not easy trades, but all this movement was tradable. Then we see a middle level reinforcement, and then we see repositioning, an initial fill, and retest. The movement here was not so good. It was a directional volatility, but still some days here were tradable. If you understand the balance structure, the market structure, you can align all the auctions together. So what was tradable here? Once again, an inertial trade, responsive activity, middle level reinforcement, and retest. And again, if you want to understand the balance deeper, go and watch the lesson about the balance structure. I'll attach it by the end of the video, so to ease your life, okay? Now, home task. Just a little home task. For the balances you found previously, if you did it, but I know you didn't. I wish you did. For the balances you found previously, identify the trading opportunities like I just showed you. Identify inertial trades, and identify fixes, inertial trades, responsive activities, and all possible types of the third segment. All these will level up your trading experience. Just believe me, just understanding the balance structure and being able to identify all these phases, all these segments, and being able to understand which segments, which phases are tradable and which are not will skyrocket your experience. Just believe me. And if you are looking for quick wins, if you are not ready to dedicate your time to all this, I'm sorry, but you are not ready for trading futures. I'll keep repeating this always. We are here to make money, and making money takes time. What usually happens in life? What usually happens in life? You go to the university and you study 4 years, 6 years, sometimes even 10 years. Then you practice sometime and only then can you earn some experience and then start earning some money. The same principles apply here. You can just start trading without any experience, seeing just one strategy, some indicators, some key levels, support, resistance. No, it doesn't work like that. You need to spend time. You need to spend about 6 months to just start getting the idea of what I'm speaking about. It will take you about 6 months for the new neural connections to form here in your brain. Okay? And then slowly, day by day, you'll start understanding the market better. You'll be able to identify balances, to identify opportunities, to identify everything. Okay, I think that's enough for this video. In the next video, I'll break down the types of days, the types of volatilities, and this will allow you to understand my logic, to understand the logic behind the W free flow more deeper, more better. Stay tuned. Take care of yourself and your family. See you in the next video.